right, again, welcome to today's webinar, Accessing Stimulus Funds, Considerations for Dentists. We'll get started here in about another 30 seconds as people are joining the program. I want to let everyone know that your phone line or your computer microphone is intentionally muted. Mike, Eddie, and Jeff, I think we're going to get started if that's okay with you.
Yeah, perfect. Sounds good.
Okay, great. Well, welcome to today's webinar. This is Jim Gerson from CareStack. I'm one of the co-sponsors today. A couple quick items on housekeeping as you're jumping into our Zoom webinar entitled Accessing Stimulus Funds, Considerations for Dentists. So the most important thing about today is that we want it to be interactive with our audience. And I would encourage you to use the Q&A feature that's on the bottom of the screen. As your moderator, I will do my best to make sure that we can answer all of your questions. It really just depends on the input. And we'll try to address them as we go through this program. If it makes most sense for the timing, we may put them in a parking lot and come back here kind of at the end of the program and address questions as we go. So please use that feature as we go through the process. If you do have a question and you'd like to ask it of our speakers, we may have the ability, I would ask you to raise your hand and you'll have the ability to pose a question and I can unmute your line. But that may be challenging just as a disclaimer based on how many people we have here today. So again, thank you for joining. Mike, if you want to advance the slide, please.
Yep.
So quickly, I'm going to turn to Jeff Daly from Darby Dental Group to give a quick introduction on behalf of our two sponsors today. Jeff, please take the floor.
Sure. Thanks so much, Jim. So we wanted to just start by thanking everybody for carving out some time for today's presentation. At Darby, we're really excited for the opportunity to partner with CareStack along with Mike and Eddie from Clifton, Larson, and Allen today to provide, some of the answers that we hear a lot of dental practices have around how they can access stimulus funds recently made available. So just a quick blurb about Darby. What you may already know about us is that we partner with our customers to help keep their dental supply costs down. We do find, however, that a lot of practices are surprised to learn about the suite of solutions that we've developed. Now, those solutions have been developed by listening to the challenges that our customers tell us that they face on a daily basis. So today, Darby's offering includes a number of services. Those include mechanical service for the equipment in a practice, comprehensive or a la carte outsourced IT solutions, and a robust offering in specialty areas such as capital equipment and implants. If you're interested in learning more about how Darby can help your practice, please reach out to one of our account managers and they'd be happy to help.
Thank you, Jeff. And Mike, if you want to advance the slide, a quick little blurb on CareStack. And I know that this is these are small kind of icons here for you to see. So CareStack, based in Orlando, Florida. I represent CareStack as the Vice President of Sales and Marketing. We are a 100% cloud-based solution for management of the dental practice, all facets. And we typically work with two types of clients. The first is the practice that's growing and wants the ability to work remotely to access everything from clinical diagnostic radiography to the back office. And they want to be able to do this from anywhere that they work. And they just need technology to move with them and reduce some of the hurdles that they face. The second type of client, while they're visionaries and ambitious, they've grown frustrated and aggravated by managing many different subscriptions to run their dental practice. This provides for sleepless nights while they're watching cash fly out the door to really cover all of this overhead. And so these practices see technology as enabling them to grow and to limit a lot of the pressures on the business. And as you look at this icon right here, or this image of CareStack, these little thumbnails represent all of the functions and the capabilities of our software. We're 230 employees strong. We're in over 535 practices as of today. And most importantly, which I think is really important, is our rating, 4.5 out of 5 stars by the Software Pundit. So enough about the commercial aspect of this program. That's it. That's all you're going to hear. The shameless plugs are over. I'm going to turn it over to Mike White and Eddie Geraghty of CLA Partners. Gentlemen, please take the floor.
Thanks. Go ahead, Eddie.
Hey, everyone. Good afternoon to you all. My name is Eddie Geraghty. I'm a principal with CLA, and I'm basically a principal and CFO, and I work across a lot of industries, including quite a lot of dental practices. I work on the biz ops side, which is CFO outsourcing / accounting, and also with a tax advisory component.
Yeah, thanks so much, Eddie. And Mike, I'm Mike White here, and some of you may have seen me speak before at some various conferences, but I do want to take a moment to say thanks to CareStack and Darby when they reached out to say, hey, we really need to get education out. We really want to help our practices during this tough time and this, pandemic, if you will, that we're all experiencing. I really appreciated the opportunity, and certainly, admire the education aspect that we all want to, accomplish here. So my name is Mike White. Eddie and I have been partners for almost 8 years now. He's got a much cooler accent than I do, so bear with me a little bit. But I lead the dental physician team on the accounting consulting or part of the leadership team, if you will, within CLA. I've been in the dentistry industry in the multi-site dental space since 2010. Really heavily focused on accounting, making sure the story is correctly, and then of course on the strategy aspect of this. So as we put together this story today and we put together this agenda, we know there's a lot of questions. I think Eddie and I are passing in the night if we're even sleeping at all, just trying to help everybody we possibly can during this time, which is what Jim is doing and Jeffrey's doing, and I really appreciate it. So as we start going into the conversation today, we have a wide range of agenda, and Jim and I went back and forth on this conversation and make sure we cover everything that's happened in the insane last few weeks that certainly happened. We understand market by market, practice by practice. Every scenario is a little bit different, and every story is different. The key to this conversation today, though, is having you think about here are the options that are available and what is most applicable to you. So we have, through that, and as Jim mentioned, I've already seen a hand go up. There will be questions throughout this. We are very much trying to answer as many as we can. I know it was anticipated having a few hundred practices online today, so we will get to as many as we possibly can and then leave some information if you need to reach out to us individually. But we're going to cover over revenue expense management, payroll credits, the changes in tax laws, loan options, EIDL and PPP. I know a lot has been discussed around that. Evaluating cash flow, because at the core of all of this is cash. We want to be able to open our practices back up at the end of this. And then what's our recapture plan? So some insights and tips and tricks we've been talking about. But let's start where we are. I think I've jump rope with every one of these stages, and I thought it was relevant. This was actually a slide into our internal ownership here at CLA amongst the partners, and I thought it was actually really reflective of the emotions that I know. I've talked to many of my practice owners, many of my business owners today across the U.S., and what we find is getting through this shock and denial phase, pain and guilt, anger, the frustration that we're all feeling, the depression, and starting to think through, and this is, Jim and I spoke about this quite a bit, starting to think through what are we going to do to survive this side and thrive through the back end of this. So I thought it was a really great slide, just kind of, putting everything on the table that we're all feeling at the moment and knowing that we're feeling that. And let's really start focusing on shifting our energies and efforts to, surviving this time, opening back up, and succeeding in this, this environment we're in today. But let's talk a little bit of taxes today and let Eddie give you some insight there.
Thanks, Mike. Starting, obviously, this Mike went through the 7 stages of grief there, and generally it's spread out over a longer period of time, but it seems that this thing has been going on for about 5 years, and it's literally been 2 weeks or 3 weeks, right, I guess, max. So there's so much that has come out, and we're fortunate in CLA to have a whole stream of people behind us analyzing the legislation, not just when it comes out, but as it comes out. So it kind of keeps us a little bit ahead of the curve. So one of the first things that came out was that the federal government sought to relieve was the fact that there's a lot of people that are going to be shut down, unable to work. Some of us are in our industry are lucky enough to be able to work, albeit remotely and maybe not quite as effectively, but others, such as dentist practices, just cannot because of the orders. So they sought to relieve this by adding in a component of paid leave for employees. And just to summarize it, there's 6 different categories. The first, I won't go through the detail, but generally it's if people cannot work because of COVID, be it that they're shut down or be it that they're actually diagnosed. and they can't work for that reason. And effectively what they've allowed is up to 80 hours paid sick leave, including health insurance costs, the payroll tax, there's no payroll tax liability for the employers, and there is also equivalent credits for self-employed individuals. That's the first thing, and that's up to $511 a day max, and up to an aggregate of 5,110, which is effectively your 80 hours. Slide, Mike? Or can I? The other area is where folks cannot work, are somewhat able to work, but they cannot work because their childcare facilities or schools are shut down. So that's at a lower rate, but over a longer period. So it's $200 a day, up to an aggregate of $10,000 for a total of 10 weeks. And again, that covers the insurance costs. The employers don't have to pay the payroll tax liability, and there's an equivalent credit.
Hey, Eddie, this is Jim. I just have a question that came up from the audience. I'm sorry to interrupt you. I think it's very apropos to this discussion. It's from Dennis, who mentions, does this apply to under firms or organizations with under 50 employees, since most of us are under 50?
Mike, do you?
Yeah, so it does. So there's this nuance in the rules, and it's a great question because there's some confusion around it. There's a nuance in the rules that says basically this applies to everybody under 500 employees. However, if you can prove, and they don't tell you how to prove that this is going to be financially disparaging to you, your business will not be able to operate under those rules, then you can get a pass. We don't understand, and the IRS hasn't given guidance. These two credits specifically related to the COVID credit, the first one, and this child care credit, a lot of this is going to be facilitated through payroll companies. So as we start looking through how are they going to execute this and how are they going to make the determination whether this is detrimental to your business, the reality is it's going to be detrimental to a lot of businesses. So great question. We're looking for more guidance on that, but there is an exclusion there. So I think you're hitting on the right questions.
And if I was to continue on from that as well, obviously this was the first thing that came out, and those questions, there was some conflicting pieces like that. But if you go to the next slide, I'll kind of explain how the government are funding it. Well, it's effective April 1st. There's your question on the 50. As Mike says,
sorry about that.
That was great.
So the other thing is the whole idea of credits. So the way that they're going to fund it is if you have to pay paid leave under that program, under that initial act, effectively what the federal government is saying, you'll get a credit dollar for dollar against your payroll taxes. So your next payroll tax deposit, which is obviously a monthly deposit at the end or the middle of each month, you can actually take a deduction for that dollar for dollar. So it's somewhat the government is paying for that. So even regardless of the fact that maybe you don't, that you have to comply, even if you do have to comply, it's still paid for by the government. And indeed, if you're in a case, an unfortunate case whereby, and I'm sure a lot of you are, obviously all of you are because of the dentistry, the credit is actually refundable, and they've came out with a new form whereby you can apply for an advance funding on that. If your paid leave is greater than your employer taxes for that month for your FICA taxes, so you'd actually get a refund. How quickly you get that refund? They've come out with a special form so that it'll happen quickly, but we really don't know until we see it go through a cycle, which will be, I guess, 2 weeks' time. So
yeah, and the key to that is that 941 credit. As we look to that, and Eddie has a big bold print, cash is key to all these decisions. They're saying it's refundable. We're still floating that, because if it is refundable and it goes through your 941, your quarterly reports, our next quarterly report through this will be at the end of June, going into July, and then how quickly they'll fund from there is going to be that key to that timing. So execution, and we'll continue to say cash is king throughout this. Jim, did you have another question you want to ask? Or?
Well, we have several here, Mike and Eddie, but I think we really should get through the balance of the program, if that's okay with you, because they're popping up.
Yeah,
and
absolutely.
I want to make sure we can get to some of the really good stuff that you guys have, if that's all right.
Absolutely. Yeah, absolutely. Just
okay.
Make sure.
Sure.
Okay, so going beyond the initial acts, which was the Emergency Family Leave Act and the original COVID-19 Act, so they came out with the CARES Act, which is this huge act that there's so much in it that it's like, it's a few years of legislation bunked into one. So there's an awful lot of stuff that we found that has come out of it, and even at the best of times, legislation comes out and the IRS or FBA or whatever the government agency entrusted with enacting it, they have to deal with, oh, well, what if? And of course, right now, one of the big pieces of the CARES Act is the stimulus funding, which Michael got through in further detail, but there's effectively, I don't know how many million businesses around the country, each one with their own little different element to it, and these questions are being fed in, and gradually we're getting a little bit more clarity. And that continues because most of the loans haven't been issued yet, they're only just about being ready to be processed. So if I go through one of the other pieces that we have dealt with, that it comes within our remit, is they put through a lot of tax changes in the CARES Act. Now, these haven't made as much noise right now because everybody was focused on the PPP program. But I just want to just quickly go through them with you. Like I said, talk to your CPAs about these. Some of these could be equally as good, maybe not as short term, but definitely in the short-ish / medium term. So talk to them about this. The first one is obviously that you've all heard that the tax deadline was extended to 7/15/2020. As we went through the last week, many states and counties from the point of view of property tax have followed suit. There are outliers, but again, you're just going to have to deal with that on a state-by-state basis. We have all the information if you want it, but it's moving. It's a moving target. The second thing was the deferral of payment of employer's share of Social Security. So every month when you do your payroll, your payroll company or yourselves, whoever does it, you pay, you deduct obviously an employee's share of FICA taxes, which is Social Security and Medicare taxes, which comes to approximately 7.7%-ish. And you have the same component for employers. Now, of the employers, the 6.2%, that's 7.6%, that's Social Security. So what the federal government says of that employer's share of Social Security, they're giving a deferral of that for companies such that any employer's Social Security taxes from March 27th through December 31st, 2020, you can defer payment on it till 2021 and the balance due on 2022. So it's actually deferring the payment of that just little component. It's not that you don't have to pay it, it's that it's a deferral, and that's, it's a healthy amount of money if you add it up. That is not allowed, though, if you are going for the PPP loan forgiveness, which takes out practically the entire business community right now. But that said, you never know. When you look at the figures, this may actually make more sense. So, and even though you may have applied for the PPP, you're still not too late to pull out if you feel that something like this is better. Right now, it's so hard to know, though. But again, it goes down to cash is king, cash projections. Have a look at your numbers. You just have to, and unfortunately, nobody has the silver bullet. Not every decision is going to be the same from one practice, one company to another. So next one is,
and I know we'll chat a little bit. Oh, sorry, Eddie. And I know we'll chat a little bit about to that point you just made, along with the EIDL loan, the PPP loan, and things down the line here in a few slides. But in every scenario, what I've found in the hundreds of calls that we're taking a day to various doctors and stuff is I hear a lot of, well, my friend did this. And, in that case, it's like, great, glad to hear that. However, in your scenario, this may be a better solution. Right. And you really have to get down to the specifics of your business, your practice, and how you're running it, because everybody's nuances are so much different from each other. Certainly learn from each other, learn from these presentations and education, but realize it's going to get down to the granularity of let's run the scenarios, the cash flow plan, the model for you, and make sure we make the right determination for you. So, sorry, Eddie, go ahead.
One of the other things then is employee retention credits. This is in the case you have qualification criteria, your operations are fully or partially suspended, or the gross receipts from 3/31 through 12/31/2020 have decreased by 50% compared to the equivalent quarter in 2019. This is something that we're looking at the mechanisms as to how they're doing this and how all of these interact, because this comes out, then how does it interact with the other ones? Piece of that we'll have to go through a cycle to see how that works. And again, again, it's a good one. It's up to 50% of compensation with a limit of 10K per month per employees. But again, those credits can be used against payroll taxes. That's the way that would work. So next slide, Mike. Another one is, and this is a pretty big one. So in the tax reform of 2018, there was huge changes to the tax laws, and one of the things was net operating losses. So if there's net operating losses, and you'd ordinarily say most dental and medical practices wouldn't have this, but in the opening years, sometimes you can hemorrhage big losses, particularly when you build in 100% tax depreciation. So the net operating losses, though, when they brought all that in, they basically said that we used to have a thing whereby you could bring back the losses. So if I had losses this year in 2020, and I filed my taxes at the end of the year and I found out I had taxable losses, well, then I could do an amendment for 19 and 18 and actually get refunds, use those losses to get an instant refund rather than having to wait till 2021 to carry the losses forward to get a refund. So it was a way of the government funding some of those losses in effect. But in practice, the ones that I have done in the last number of years, it could take up to 9 to 12 months to get that refund. And it wasn't, by the time it came around, the 2021 was there. And that was in practice. I imagine they're going to try and probably similar to the payroll tax credits, come up with some mechanism for fast tracking that. That's what they've advised. We don't know exactly that yet either. So one of the things on this CareStack is it's after, so the 2018 reform basically said, no, you can't bring it back any further. You have to carry it forward, which means you always have to wait. Now they're after saying, we're going to reverse those rules for a period and we're going to allow you to bring back your losses 5 years. That means that if you have a loss and they're allowing you to do it for 2018, so if your 2018 taxes, your 2019 taxes, you are allowed to effectively now, instead of having to carry these forward indefinitely till you have profits, you're allowed to go back 5 years and start with the first year. And the tax rates were higher in that year as well. So there's a possibility of tax arbitrage, i.e. you're getting more bang for your buck with those losses. So again, it won't be everybody's, but it's something to watch out for because you may be in a situation that you started to practice in the last year or so, or you may have hit bad times in that practice or whatever. So again, it's something to consider, and hopefully they'll come up with some fast track ability to actually get the refunds. So that's a pretty big one. If you're in corporations, most dentists we come across aren't. It's even better because you're talking about now the corporate tax rate is 21%. Up to 2 years ago, it was 35%, and that's just on the federal. Wow. And this is all on the federal level. So therefore, if you could bring those losses back, you're now getting losses that would have ordinarily been 21%. Now you're getting 35% of them back. So that's a big. That's as I say, that's real tax savings as opposed to tax planning savings. So that's pretty much the net operating loss, huge one there. Another one is suspension of excess business rules, not as applicable to most people, but post-tax reform, you couldn't use more than 250K as a single person or 500,000 as a married filing jointly taxpayer of business losses against non-business income. So that was something that came out. Like I said, I don't come across it as much. Another one that's big in some cases, again, it may depend on if you've purchased buildings through your practice, you never know. The limit of the amount of business interest you could offset against your taxable income in tax reform, and the limit was 30% plus the business interest income, so 30% of adjusted taxable income. They've now increased that limit up to 50% of adjusted taxable income plus your business interest income. The idea there is that you're allowed to use more of that business interest in these hard times. Again, this is a temporary measure such that hopefully you won't pay as much taxes. Don't forget, the tax savings aren't necessarily just getting a tax refund. They're just as importantly not having to pay tax. So that's one there that hopefully, and again, all of these are backdated. You can use these for your 2019 tax return. So next slide, Mike.
Yeah. So as we all go through back to that first slide of the 7 stages of grief, and we just summarized almost 1,000 pages of legal documents and legislation and all that stuff.
Right.
I think we have to reevaluate where our stages of grief are. And Eddie, I appreciate you kind of walking through all that. I think what the precipitous, and Eddie alluded to it, that so many people are hearing about is this PPP program. What does this mean for me? I hear I have free money. How can I get my free money? And they're missing, some of the tax things that are coming through this process, and some of those credits and things that we need to be working on in addition to making sure we apply for this. What I've also been hearing and know that as we walk through these EIDL loans and PPP program, I'm having twice a day conference calls with bankers to walk through morning to night, because legislation is changing and interpretation of the laws are changing as the days are going on. So going back to that conversation, well, I heard this, you may have, and I gave 11 presentations last week that were possibly different than today's advice today, just because things continue to come out. But if we look at the two loans, the EIDL loan is disaster recovery loan. Everybody on this call, if you have not applied for it, and again, this is my perception, if you haven't applied for it yet, I would stress you of possibly looking at this loan. When we look at these two programs, the EIDL loan is really the one that's most impactful to small business. It's the one that was drawn to small businesses and really kind of built around that. The Paycheck Protection Program was really geared towards our individual employees and keeping them employed. And I think at a very high level, I think that's the highest thing I can say. But as we walk through both of them, the EIDL loan, disaster recovery, up to $2 million, less than a 4% rate, up to 30 years, and 0% forgivable. The reality is that 0% forgivable is actually a $10,000, up to $10,000. If you check that box when you filled out the application as a grant, that if you then got the PPP would roll into the PPP program. What I learned yesterday from the SBA, I'm on a every other day call with the SBA. What I learned yesterday from the SBA is it's $1,000 per employee up to $10,000 is how they're interpreting it, and that's how they've been told to view this. So it may not be the full $10,000, but there is some grant component. You go to SBA.gov, you walk through the steps. There's 15 questions you need to know. And if you have owners, there's 15 questions times 2 that you need to know, or 3 or whatever it may be, that you have to work through that process for yourself. I stress you to possibly apply for that. You can be used for payroll, fixed debts, accounts payable, other expenses because of the disaster impact. There's been a lot of questions that can I apply for both? Yes. Originally it was unknown, then it was no, then it was yes, now we're still at a yes. However,
right.
They have to be for 2 separate purposes. You see payroll in both of those buckets. If you're using the PPP for payroll, utilities, rent, and for that forgivable portion, you can't then also use the EIDL loan for the same portion. There's plenty of other operations as dentistry and business owners that we have to deal with and that we can utilize that EIDL loan for. The PPP program is administered by your banker. Your banker, whether they're SBA or not, a lot of banks are standing up their SBA program or getting themselves available to it. If you haven't spoken to your banker yet, by all means, please start reaching out to them. The funds are going quickly. If we looked at it as of Sunday and going into Monday this week, many banks were already saying we've closed our program because we've overwhelmed the number of applications we were going to take. I have heard some other CPAs and other advisors, not saying they're wrong. It's just a gambling game, and I'm not much of a gambler, so have made comments that, well, hold on, don't apply for it yet, because then once we get the funding, we have to hire our employees back. I understand their sentiment, and if the money was guaranteed 100% of business owners, I would 100% agree with them. But we don't know how far the government's willing to go. As we know, as last night, many of you read the news, they are talking about deploying another $250 billion, $350 billion, $400 billion, whatever it may be. But the first $350 billion is projected to only encompass 10, maybe 20% of small businesses. So they just double the money. We're still not to 100% business coverage. So if you haven't applied for PPP, I would also strongly suggest you apply for that. Now, let's get to the nuances. It's a 2-year loan. It's based on 2.5 times of monthly payroll. One of the questions that comes up often is, what about FICA taxes? What about everything else? You exclude FICA taxes and all the tax pieces. It is just gross wages plus benefits that you're working that and then you're allowed to take. up to $10 million. We've had a few, and Eddie and I were just chatting, we've had a few bigger loans that have been approved. We've had a few smaller ones that have been approved as well. But they are getting through the application process, even though it's incredibly overwhelmed. With the forgivable piece, it is up to 100% with approval and the process is followed. They keep alluding to most likely it's going to be 75%, because if you think of 2.5 times payroll is going to be what encompasses it, well, your payroll is going to be 8 weeks of payroll will encompass 75% of that loan. If you're employed, you're complete people and you have them back on staff. Apply with your bank, whom is an SBA approved lender. I do know some conventional banks that aren't SBA lenders that did stand this up. So the Treasury website actually has some links and resources that says if you don't have a bank or whatnot, here are some applications or here's some people that are applying for that. I'm going to pause there, Jim. I'm seeing hands raised like crazy. Do we want to address any of those questions?
Sure, I'll try unmuting and seeing how that works. And we do have 10 questions. We're tracking about a half an hour in, Mike and Eddie. And so are we doing okay time-wise from your end?
I think the presentation? We can pace it. Again, we're here for questions. So, definitely continue to work through them. Do you want me to just work through them at the top?
Well, we've got one person raise their hand. Edward, you're unmuted. If you unmute your line, you can ask your question.
Hello.
Yes, go ahead, please.
Yeah, I think the question was answered, and that was the confusion that there is with the two types of loans. Because I get emails saying a few days ago, yes, you can do it. And then recently I got another one, and they contradict each other. I'm like, what's going on here? And so that was good that the CPA made that clarification. So I appreciate that. And I have applied already for the EIDL. And we should be waiting on disbursement from that. No one has, according to my the folks that I'm working with, no one has gotten anything yet. On the PPP portion, the bank sent me a letter saying basically that they're 90% complete, that they were going to send me a link to a portal where I then will complete the remaining 10% of the application process. But I have not heard from them since last week. So it's kind of like after what the CPA said that the funds might deplenish, it's kind of worrisome. But hopefully they'll get to me. So thank you. You guys are doing a great job here. Appreciate that.
Thank you. Thank you, Edward. And I went ahead and muted you, but thank you so much for the feedback. And you're right. And what we have found, it is truly a bank-by-bank interpretation. I remember, again, referencing some presentations I did last week. I went online. I talked to 4 or 5 banks. I went and gave a presentation, and 3 of the 4 banks said the exact same thing. The 4th bank said, no, Mike, we're interpreting the 880 pages differently than others. So, this kind of gets back to that comment of when you're talking to your friends and their bank is interpreting it differently, it truly is becoming a case-by-case number. The calls I had this morning with 3 different bankers, I actually sent a W-3 out, sample, blocked everything out, and blocked it out and said, okay, which number do I utilize? And every one of them gave me a different number to utilize for the application. So, I know some of you are experiencing that frustration, and the banks are learning this process as quickly as they possibly can. But that is the real world scenario. And I think some of the questions were around that, whether I've been, already denied because I don't apply. I have heard that before. I would suggest, reaching out to your banker on a personal basis, because you absolutely can, assuming you're in dentistry, it's why we're on this call. For the most part, it would be an applicable business and is available for the funds. There may be something within the application process you aren't submitting correctly, but Edward, I definitely appreciate the feedback there and some insight into yours. You want to go to a couple other of these?
I just wanted to add to that, Mike.
Please.
Your very point about the banks is so relevant because obviously I have a good few clients with Chase that are going through this, and the Chase have actually, even though clients that have decades of business banking relationships, the business banker has been told within Chase that they're centralizing this whole function and it's on a first come first served basis. Now there has been emails saying, hey, just computerized emails, but they are apparently getting through them. But I would advise, like Mike, just keep in touch with that business relationship banker nonetheless, because they can check up from internally. And then you have other situations whereby I've got banks that never lent in SBAs before, and they've just resurrected their authorization and decided to go it on this, which is good for those clients. and I'm just dealing with the president of the bank, because it's a tiny small bank in you know what I mean. So you've got different situations here, but keep talking to them. Do not assume. Do not assume. Do not assume.
And there's a couple of questions, Jim, I'm going to jump down to because I think they're very pertinent to the slide.
Sure, go
if you don't mind. One question is, if we get approved for PPP and we hire back all the employees, but if the business is not fully functional after using all the PPP loan money, then what? What happens if we cannot keep the employees? And I'll hide the name. I won't say the name. It's a great question, and it's a question we have in conversation we have constantly with our practices. So there is, back to mixed messaging from banks, there was 48 hours ago, banks telling some of our customers that you can get the application, fill it out now, and we'll hold the loan and hold the slot for you. You can use the money when you're ready, because everybody knows, or you may not know, but up to June 30th is when we need to hire up to 75% of our employees back. If you apply for the loan, and of course this is what's been coming down the last 12 to 24 hours, they want to execute and deploy the funds within a week. 7 to 10 days is what I've heard, kind of on average, some a little faster, some a little slower. But they want to hire those, they want you to hire your people back ASAP. That's the point of this exercise. So when you ask this question, and again, it's a great question because so many people it's relevant to, if we go back to the purpose of the PPP loan, it is to get your employees back to work. They want your employees on your payroll, you paying them, and they're going to give you the money to pay them, in addition to utilities, rent, and interest, and some of these other things. If you aren't hiring them back, then it becomes a loan, and you have 2 years to repay it. There is not the forgivable portion. There is some caveats and exceptions to that. If this goes on longer, and part of our conversation here in a little bit is how long does this go? If this goes on longer, 4 weeks, 8 weeks, 12 weeks, 16 weeks, this becomes a true cash flow planning conversation. And we're going to touch on that a little bit more here in a little bit, but I thought that was a great question, and I wanted to make sure we addressed it. Another one that's relevant, and I think it goes to the calculation, is what about independent contractors? And I think that's asked a couple times throughout. One of the last minute nuances to this exercise was originally when we were calculating the PPP, we were including some of our associates that were 1099 as part of the compensation calculation. They came out and gave guidance that says, no, 1099s, independent contractors, they need to apply themselves. So the business owners that are paying their associates do not get the credit for those 1099s. Those 1099s, those doctors, associates, employees that are 1099 would be applying for the PPP loan themselves. And I think that's a critical piece to understand and know. Through this process.
Thank you for clarifying that. That has come up a couple of times here. Yes.
Yep.
Yeah.
I do think, as we look to that and we speculate why they're doing that, it's because they don't want your associates on payroll. They don't want them on 1099. So it's probably their way of, penalizing you in a way of saying, hey, these are the rules. We should probably be following them anyway. So, okay.
Mike, we have one other hand up.
Yeah, please.
Yeah. Do you mind if I can interject here? We have a really good more material to cover. I'm going to open up the line.
Yeah.
Donald, you need to unmute yourself here, and you can go ahead and ask your question.
Great. Hold on. Great. This is Don. Thank you.
We can hear you. Go.
So, great. So my understanding about the PPP is that if you get the funding now, you have to dispense it almost immediately. But then what if we're not returning to work, let's say late May or June, and you don't get like the full 8 weeks, and then the rest of it becomes a loan? Is that your understanding and your interpretation of it?
Yeah, and I think I just addressed that in that last comment, but yes, Donald, I mean, again, the goal is to get your employees back to work now. So it becomes that cash flow management. Remember, the PPP is a paycheck protection program, and when we say paycheck, they're referring to your employees, not referring to you, your business, or anything else like that. So when we're thinking about the intended purpose for this, is they don't want the unemployment rates across the nation spiking as they have been. So they're trying to get you to bear the burden of that payroll, float it, and they're going to give you a forgivable loan, but they want you to bring your employees back. Even if they're sitting at home not doing anything, their intention is you put your employees back on the payroll.
So my next question is, let's say if you decide to risk not applying for the PPP loan right now, assuming that it can apply through June 30th, but then maybe there's some money left over, and then you apply, let's say the first part of June, and if there is money left over, then can you use the PPP program for the next 8 weeks, even though they were on, let's say, like unemployment or FMLA, in between the times?
So
can I?
Yeah, go ahead, Eddie. Yeah, please.
So effectively, the way it works is you're given a loan for effectively to fund the payroll for those 8 weeks. If you in those 8 weeks, if you get to the end of it, and I might give an example there if somebody says, oh, well, we won't pay, we won't, we'll try and stagger it along. But if you get to the end of the 8 weeks and you have paid less than 75% of your payroll, that portion will not be forgivable. There's going to be a mechanism for forgiveness, and it's going to be based on 2 metrics. It's going to be based, and there's still we're still waiting SBA guidance on the forgiveness program. I'm sure there'll be as many questions comes out of that, but we do know that it's based on your full-time employees now. All right, that's number one. Then they're going to look at a period from February 15, 2020 through June 30, 2020, and the equivalent period in 19 to see how your headcount matches. And there's all sorts of ifs and buts around that as well, because I can think of 10 of them myself offhand, and we have no answers. But they've assured us they're giving guidance. But then the second thing is that you have to pay dollars. You have to pay 75% of that loan for payroll costs. And if you don't, that piece of it won't be forgiven. It'll be interest at 1% and repayable over 2 years, notwithstanding the first 6 months deferral. So does that explain it?
I think it does. I want to keep us going here because you guys have I've seen a deck and you have tremendous content, and then we've got about, as we have time, we'll get to the Q&A if that's right with you guys.
And we'll probably address some of these questions as well along the way, and we'll kind of continue to flow through that. But great questions. And then one thing I'll do is I button up on this because I think it's going to come up quite a bit throughout this, is remember, folks, the banks are still learning how to interpret the execution, because I think one of the questions was, what about the forgiveness? The banks are still learning how to execute on getting the loan. The execution of this, there'll be more guidance, more clarification, more details than what has been given today. So I do definitely think that as we're looking at how we understand the execution of it, what the intention is, as Eddie just explained, we have to remember that there may be some more clarifying points to that. I think ultimately, Donald, to your question, I think a couple of other people had a similar question. It becomes a game of chicken, if you will, as well, just from a pure cash flow standpoint, is will there be funding? And, it's very well speculated that they will be out of funds this week. They executed some more. They'll be gone in a few days thereafter. So, there's so many applications right now in the pipeline and pool. I would just be focused on cash flow, which is where we go into today. So as we go into this question, and I think this is going to be what answers a lot of questions and we think through it, what I want to spend some time on in the next couple of slides and then kind of getting into the thought process around it is the process. What have we been doing? As you noticed, some articles there I just highlighted. Within CLA's website, we do have a COVID resource page. We've been putting out blogs and articles and stuff like that and hosting conversations just like this to get information out. But the biggest thing is you all think of your individual businesses, your individual practices, understanding that cash flow impact is going to be critical. So if we just use case in point, some areas maybe were slow to close. So here in Texas, we were a little bit slower to close than some other markets, and we seem to be hell-bent on opening by the end of the month. Whether that's reality or not, who knows, but that's certainly the mindset of a lot of folks. As I look to my practices in Oregon and California, Washington, some of those western states, they seem to be a little bit more conservative, saying, Mike, I may not open until June, July. June, I remember texting with some folks over the weekend that Oregon came out and said, we may stretch this till September 30th for dentistry, and there's that concern going over the weekend. So when we start looking at what's applicable to you and understanding your business, we have built a business within CLA and within the industry of doing budgets and doing plans and having that whole scenario. But even if you did that, nobody predicted a complete wipeout of revenue, albeit some collections and stuff coming in within your business model. So now is the time to really think through, all right, what if I'm closed for 4 weeks? What if I'm closed 8 weeks? What if I'm closed 12? And then as we curtail that, what does that look like? How much longer is it going to take me to get to 100%? So as we start thinking through these preservations, the things that we should be doing at a very high level, gathering that information, gathering that necessary information, start thinking down your P&L. You know, as Eddie mentioned here on the March 31st, that kind of deadline that was originally given out there, not originally, but that was given out there, whether we furloughed our employees or terminated them, that decision has come and gone relative to the tax credits piece, but that doesn't mean I'm still not having the conversation, as is Eddie, on do we furlough them now? Do we lay them off now? This may go longer than I anticipated. I had a single practice this morning have that conversation. Mike, I was going to cash float this as much as I could, but I think this is now going to go longer than I originally thought. So now I have to terminate. I realize I'm exposed for the credits, but I have to stop the cash flow bleed. But when you start gathering your documents, gathering this necessary information, put a budget together, whether we do it for you, whether you do it with your CPA or you do it in Excel, Excel yourself or just on a pen and paper. The key to this conversation is start thinking through every one of your vendors, start thinking through every one of your revenue resources, your vendors, your team members, yourself, and you're building a budget not only for the business, but also your personal drain within that business. That's key to know this. And think through this, and I have a great slide coming up here. Look at your 12 months historically. You know, dentistry, like every other industry, has cyclicality. There are ebbs and flows, or good months. There's softer months, if you will, depending on what type of dentistry. If you're an orthodontist, if you're a general practitioner, pediatrics, whatever it may be, there is some ebbs and flows to that whole curve. You may be within your business model already a lower curve, so maybe the impacts could be great coming out of the back end of it. But start looking at what your historical monthly trend is. Pull your end of month data out of your practice management system. Get with CareStack and understand what is this information that I need to help me understand my revenue cycle of the business. And this is where it's so critical when we were partnering with CareStack here to have that conversation and make sure we understood the revenue cycle here. And start thinking through, what is the next 3 to 6 months? How much AR did I have going into this model or into this time? Do I still have somebody committed to collecting that money? Has insurance shut down? I have heard slower payments happening, but has insurance fully shut down? Am I still getting a little bit of cash, opening back up? But, start building that initial budget. Further, start thinking through your vendors, your relationships, your rent, your landlord, your debt, some of your suppliers, things along those lines where you say, okay, what's my mission critical things that I need to have through this? A lot of our clients are still keeping us on retainer because they need advice and strategy through this whole process, but their landlord was willing to give them a 3-month deferment and tack on the rent at the tail end of this and work with them on that side. So when you start thinking through that, and same with their bank, you start thinking through those pieces, it's critical. We developed this COVID planning, approach, and it becomes a recapture curve. It becomes a conversation. But what I was just referring to is, let's think about the possibilities here. How long is this going to go? None of us know that answer, but we need to have a plan for every scenario that we have. How deep is this going to be? Well, we still have some practices that are performing essential services. If you're one of those practices, great. Is it profitable? Those practices that are doing essential services, they've set thresholds of, we have to see this much volume per day to put our staff back in the practice, and for it to make sense to that process. If they have multiple locations, they're saying, great, we may not be able to fill all our practices, but we can fill these 3 in their hubs, or these 1 or 2 in their hubs for everybody else, and we just feed it. But that still means they need somebody scheduling, that still means they need somebody dropping charges, and certainly a skeleton crew on the doctor side as well, and the assistants and staff. So, think through, what does this curve look like? And then, of course, on the recapture side, and I'm going to flip over to this next with an extra little, piece there. And as I'm talking through this, folks, all of this kind of leads into what I'll show you guys in a minute is the cash flow model we built. Again, it's just to give you some ideas. If you'd like to work with us, we can do that. However, this is to give you some ideas of thinking through this process together. So as you think through, how big is this surge? How long is it going to go? Also on the recapture side of this, meaning if we have to open back up, if this goes 4 weeks and we're open here in Texas by May 1st, I would imagine our schedules are going to be pretty good, maybe 100%, maybe 85 to 90. Maybe we can expand hours, expand days, maybe get some convenience factors, have a little bit more overtime, but certainly kind of get through that process. If this goes on 12 weeks, or speculation of more, depending on the marketplace, and of course, none of us know, it may take us another 12 weeks to get back to 100%. It may take us 16 to 20 weeks. We've got to think all these employees that we're protecting through the PPP, all these employees that are filing for unemployment right now, they don't have insurance, or they may have lost it through this process. And even if they do have their insurance through this process, they may not have the disposable income to do the treatment planning that you wanted them to do. They may not have, cash to do the co-payment, the down payment. They still have to pay rent. They still have to pay mortgage, feed their kiddos, feed themselves. And
Mike, one thing I want to mention here,
yeah, please.
Sorry, just to add here, is the new reality of dentistry after COVID may be different, right? The ergonomics of the practice, right? Waiting rooms, the capacity that you have to have, the distancing between patients.
That's right.
If you're an orthodontic practice with open bays, maybe that goes away now. There has to be partitions. What does that mean to your production per hour? So I'm glad you're having this dialogue about this.
No, and what does that mean? I mean, you just brought up a great point. What does that mean to the investment in your facilities as well? But go ahead, Eddie.
No, I was just going to say, just on Jim's point there, one of the questions I see here was about the employees, but bringing, there was a confusion between, paying the employees, notwithstanding that they're actually, the business isn't open. I mean, that's the whole point, as Mike said, it's a paycheck protection program. But what I've said to some of my clients is, but they are being paid and they're being very happy. And right now, everybody wants to work. At the end of the day, that's generally what we want. So there's a lot of things within your practice that you can start thinking about now, like the whole social distancing and all of that. What's that going to look like in 4 weeks' time or whenever we open, or 8 weeks, whatever? Start looking at that and start using, such and such may be a hygienist today, but now they're a process engineer. They're going to be looking at the process of how we get people in the door, and looking at things like maybe automating our front desk and stuff like that. There's a lot of things that can be done. My wife has a great phrase about we're constantly trying to fix a car and it's going 100 miles an hour down the highway.
Right.
And that's always been our reality, every business. Suddenly, actually, the car has stopped or barely chugging along. We can actually do an awful lot with the car right now. So even though those 8 weeks may not be spent by your employees on dentistry or dentist-related activities, as normal, they can be on the business, on the process, on the financials, on the IT, and all of these elements. And
Eddie, it's a perfect time to do a software. It's a perfect time to do a software transition, right? My shameless plug. A lot of times we hear from dental practices that we can't do a transition because we're too busy. This is the time to bring down your overhead, switch to my company, my shameless plug, get out from the overhead of all managing all these subscriptions, right? Do the transition. I'll shut up now.
And to add on,
throw that out there.
And the goal there was
Jim. Yeah, go ahead, Eddie. Go ahead.
If you go back to Mike's slide with the new reality, we're all saying it's going to be somewhere chugging a little bit low of the thing. For some practices, the new reality may be much better if they invest in their practices now and do those IT things and do that mental things about how can I improve the experience.
Yeah. No, and to add to that, Jim, joking aside, I think the key is, and I think there's some questions in here. It's like, I got approved. Congratulations, by the way. I got my funding. Now what? Because if you have regulations, stay at home and all that kind of stuff, what can we do? Well, great. Here are executions of operations, administration. As business owners, we have that litany of lists of things like us advisors are telling you, we need to be doing this, this, and this. Now is a great time to execute on that because, again, as we go into this next slide and we talk about that curve, and I'm very visual, by the way, folks, as we talk about that next curve and ramping up, how are we the most effective in your practice 2.0? Do you think this is almost going to become a startup with a patient population and facilities, but you're starting over and in a way as you work through this? Kind of shifting into this, and I know I'm trying to be respectful of time as we're getting close, here's a quick list, and I left it up there so you could read through it, of things that you should be thinking about, of reductions, delays in spending, hiring delays, reduce or eliminate discretionary benefits, things that maybe some of those personal expenses that we always ran through the business and, that were luxuries at the time. Maybe we're again looking at personal and business because cash flow preservation is key. What working capital provisions do you already have? Do you have some lines of credit in place? Do you have did you get approved for the EIDL loan? Did you get approved for PPP? Where does our funding come from? Do we have some receivables still coming up? And remember, those receivables that are normally funding that next month of business, when you open back up, you won't have that same month. So when we expand our expenses back, and that's as we go into this next slide, we expand our business back up, we've got to think about what does this look like and what is that norm? Where I really want to focus on here is that top right bucket. We've seen the COVID planning curve, but this really has become, this is an intuition model, folks. This is something we developed. We built it into Excel and Power BI. And as a shameless plug, we've made this normally a $10,000 development product. We said, look, we want to get to the market. It's $1,000 to implement and run cash flow scenarios for you in your individual practice. So if you go to our website, it's an engagement letter right there, and or reach out to us here at the end. But this is what we're utilizing from single practices to we actually have multi-billion-dollar hospitals running this same model for us. And there's some more bells and whistles behind the scenes not seen. But when we look at this, that gray box, that gray line up there in the top right, that's your original budget, or that's what you did the last 12 months if we think of that way. What is that dip? And then in our original budget, as you can see, going into November, December, we're fairly steady Eddie or whatnot. But in our model here, is there going to be an ability to recapture? Can we expand our days, expand our hours? Can we look at, within our practices, can we look at ability to add services? Maybe we're thinking about doing aligners and we didn't do them before. Maybe there was a specialist we were talking about and now we have a pent-up demand and now we can partner with that specialist. Are there ways to expand our ability to generate revenue? Depending on when you open back up, you may not see the same 2020 that you would have as a 2019, but you're certainly trying to get as close as possible and create a new business model going into 2021. Cash flow is king though, but when we think about that ramp up and something that's really critical to think about, and what I've been saying, especially with Darby on the call, as we're operation, there's still going to be critical things that we need. There's limited resources on PPE. I know the dental industry is being called on giving theirs up time and time again. I have practices, I won't admit this, buying things on black market, whatever it may be, but all suppliers, most suppliers are saying, look, we can get you limited ordering. So don't completely cut off your ordering. Make sure you're established to go. If you plan on expanding hours, expanding days, make sure you plan on your ordering, your inventory, your supply, but do that inventory now to see, what do I have? Do I have things squirreled away in various drawers and cabinets and things like that I didn't know about? But make sure you're ready to open back up, on the backside of this. So as we flip through, here's a few more things just as the resources. Again, check out our website. We do have a coronavirus resource page. Sign up for our blog, things like that. We'll continue to add information on there. We have stood up a COVID planning task force within the firm that are doing everything from filling out applications with you for your PPP application to helping you make sure you fill it out yourself or just providing you the resources like this necessary. Lastly, and it's the only one I animated here, build your team. This is what Eddie and I and Jim and I have had this conversation countless times. This is where we're going to see the best of humanity and probably the worst of humanity come out. When you think about those people and those calls, Eddie and I, I'm getting up on average at 2 o'clock in the morning now just to keep up with demand. Eddie's going to bed at 3 o'clock in the morning, so we just hand off the microphone in the middle of the night right now. But when we pass in the night, we're really trying to prioritize getting to everybody. Those clients and those relationships that are very strong relationships and always have been are the ones that we're really working with. The ones that just looked at us as a commodity and stuff, those are the ones that, I'm sure Jim can say the same, and I'm sure a lot of your relationships, sometimes your vendors, your suppliers, I see it, are just treated as somebody who, I just buy something from them. Well, now is when you need us the most. You need all of us on this phone the most, and you guys need each other the most. So build your team. Now is the time to establish that. I did put a quick synopsis in place, and I want to make sure that we have this as we talk through and answer any other questions. But here's some quick bullet points. Jim, what else do we have with the, and I know we're out of time, but if we have a minute or two.
Yeah, we can take a question or two. If you want to just go through, while you're looking through why don't you open the Q&A mic and select a couple of questions you want to answer. I want to let everyone know that we've recorded this session. We're going to host it on the CareStack.com website under resources. So you'll be able to access this webinar if there's anything that you missed and you want to check back in on it. Mike, why don't you fast forward through the slide if that's okay?
Yep, let me get back there. I was just looking at this.
Sure.
There you go.
And then I want to let everyone know of our upcoming program that we're doing here. You know, at CareStack, we like to have webinars that are relevant. I think this is going to be a really interesting program. And we have a very diverse panel listing here of people from the deal-making space, legal structure. And so this is a program we're going to be hosting on the 21st of April. And I would say follow CareStack on LinkedIn or Twitter if you want our most up-to-date feed on the programs that we're hosting that are relevant to the dental community. So this is an upcoming program. So Mike, why don't you jump back in? I know you want to have your contact information up here too as well, so people can jot down your email. We'll leave that as the placeholder.
Yep. So as we work through some of these questions, and they're all great questions, and I know there's a lot of them, so we'll try to get as many as we can. You know, one of the questions, and some of them are very specific to individual practices, you know, to pay for dental material purchase, where should the funds be taken, EIDL or PPP? That's a great question. Really, you know, EIDL is, again, your business purpose. I'd be looking at your EIDL loan. Is it a better terms than your existing debt may be? But if you don't have the funds, I would be utilizing EIDL if you're employing your payroll, your employees to come back. Remember, PPP is for your people first, and then utilities, rent, interest. Those are the main functions of the PPP loan for it to be forgivable. On the EIDL loan, it's for everything else within that purpose. A lot of questions around contractors, self-employed, all that good stuff. Yes, one of the questions is what is the timing? So for the self-employed, it would be coming out Friday. That is correct from the funding. I don't quite understand, other than trying to flatten the curve on the number of applications going in at once, why they did it 2 different Fridays, but the self-employed individuals would be going out tomorrow. They're going to be in queue just like everybody else. I don't know any bank that is delineating self-employed within their queue as others. You know, one of the questions relative to
and Mike, we can wrap it up here because we're take one more question because we're at the top of the hour. Eddie, you wanted to mention something on that. I saw you there for a second.
I just wanted to mention just Mike is on with sole practitioners, and our Schedule C are independent contractors, and to put the two of them into the same pot. And I've had the question from clients, is it the gross receipts, which on 1099 independent contractors, they seem to be suggesting give in your 1099s, and that's what will be the support and documentation. But if a dental practice, A, you won't have 1099s for all your gross income, and B, you'll be, you know, your net profit is probably 20% or whatever of your total gross receipts. So which is it? And we haven't had guidance on that yet, but I'm inclined to go for the bigger figure right now. But again, we're still waiting on some guidance on that.
Thank you.
Okay. All right, guys, really appreciate the time. I know we ran out. There's a lot to cover. Jim and I talked about possibly doing this another week or two, so we'll continue to keep you posted. But appreciate your time. Stay safe out there. Cash flow is king. Do a budget, and we'll talk soon.
Thanks very much,
Mike and Eddie. Yeah, Jeff, Daly, thank you so much for your contributions today. Really appreciate everyone making themselves available. And again, carestack.com/resources. And in there, you'll see webinars, and you'll have, in about a day or two, we'll have this posted. And so you can watch it or download it and watch it again as you're on your convenience. So we'll keep everyone posted here through our LinkedIn page on upcoming programs. Thank you very much, everyone. Appreciate it.
Bye.
Stay safe and be healthy. Take care. Bye-bye.